For me, that was a very insightful panel. As probably one of the younger people in the room, seeing another female entrepreneur on the stage is very exciting for me. And one of my favorite things about Open is we really do celebrate diversity and bring voices to the stage that, you wouldn't really expect. So I really do appreciate that. So our next panel is going to be on global financial overview, and our own Open DC chairman will be giving it. So everyone please give a round of applause for the moderator, Adil Hassan.
Hi everyone, you definitely want to be here for this because this is DC and we've got the IMF here. So if you're curious about the inside scoop, the skinny on what's happening in global financial markets and how it will impact you guys, you want to be here for this session. So our guest is Asad Qureshi from the IMF. Asad, please come up. Asad's a senior executive at the IMF where he works on financial markets and how central banks navigate crisis. Now, let me be clear, he's here at Open Global in his personal capacity, not representing the IMF. And while he is originally from Pakistan, of course, and has also worked for the State Bank for nearly a decade, his role at the IMF is not focused on Pakistan. So this is a broader lens of financial markets and cross-border business. Now, most people build their companies assuming the system will hold, that the bank will clear your transfer. The regulator won't change the rules overnight. The value of your money will more or less remain the value of your money. But what if those assumptions break? What if your bank freezes transfers? What if the government tells you you can't take your capital out of the country? What if you wake up one morning and your customer's buying power has evaporated, not because of product market fit, but because the currency lost 20% overnight? For those of us who are building with cross-border exposure, US and Pakistan, sure, but also the Gulf, UK and other markets, we're not just managing product risk or hiring risk, right? We're managing regime risk, reputational risk, and sometimes existential risk. And yet, markets keep moving and people keep building. And Asad is in the rooms where the world's central bankers make those kinds of decisions. So he's seeing the signals before they hit the headlines. So we're really lucky to have him in the room to answer a few uncomfortable but essential questions. Anything you want to say before we dive in?
No, thank you, Adil, and thank you, Open, for giving me an opportunity. Thank you. Thank you, Adil, and thank you, Open, for inviting me. Just one correction, and I think you mentioned, I'm not representing IMF, I'm not talking about anything of internal, but I'm just sharing my experience, which is more from the multilateral and being in central bank. So I would love to look at it and answer the questions that you have.
Asad, what are the early signs, the earliest shoots that you see of a financial system that's under stress that business operators and founders and executives usually miss?
Very good question. There could be many indicators in terms of from a financial stability perspective. But I think the one key element that most people miss is how functioning the financial markets are, or the depth of the market. Because that's very important when the business that you're doing, because that is also entails the cost of business and the intermediate function. So most of the time, how the financial markets work is missed out, or how deep is the financial market. And if you look at any of the crisis countries, all the world, whether it's Pakistan or in other countries, it's usually the financial markets are the one which gives you the first signal of the stress happen. And that's the important element of it. There could be several indicators when you're looking at assessing it from an outside perspective, because when you are there doing a business, you're into raising capital, you're into, like you said, managing exchange risk, you're in terms of ensuring that your smooth payment cycle goes through, whether you're sourcing resources or whatever. So all these elements are important. And I think the thing that you can look at it, there are several factors that you can look at in terms of functioning or a disorderly market. Like the kind of prices spread that you have, the kind of liquidity and turnover that you have in that market. The biggest important part of it is the financial markets, whether it's exchange, debt, interest rate, or equity. What is meant by functioning market or depth of market is that despite the stress, there should be price available. There should be level of buyers and sellers available. If the market functions and the price can move, but if the price is not available, then what do? Even if you're willing to pay a certain price and you do not have a thing, whether it's exchange or whatever. So that's why, in my opinion, I think that's the first thing. And most of the things that we look at from a bilateral or multilateral surveillance, we've got several flagship publications you can look at it. One of the things is Global Financial Stability Review, and it emphasizes the functioning of the market.
So in Pakistan and other emerging and frontier markets, we've seen the same movie a few times. Dollar shortages, capital restrictions, policy whiplash. In your view, what kinds of behavior do these environments reward and what gets punished?
Very interesting question. Now, I've seen from both sides of it, while being in the central bank, hands-on and from us. I think I don't have to talk about the kind of issues, the challenges that Pakistan faces. I mean, everyone knows it. The biggest problem that we have is probably the execution and follow through in terms of consistent implementation. Consistency in policy sometimes. And sometimes we shy away taking the hard step, whether for political reasons. So the thing that is important, I mean, the ambassador was there, we talked about uncertainty, challenges. They're always there with any market. We talk about it even US or XY. So is it Pakistan. The point is that you have to think through in a more long-term objective where you want to be, and then very clearly and step by step evaluate how you want to reach that. The point is we create a milestone and then forget about it, or then we move to other things. And that's why even in context of how many times IMF has been programmed, is that you try to put bandwidth and not take the reform, which are really structural things. Whatever you want to talk about it, whether it's tax reform, whether it's fiscal, whether it's other things. So that's, I think, the key issue. And I think I was, the last time the finance minister was here and we had a discussion with Pakistanis, I think what is important over here that he understands this part of it right now and is trying to take gradual steps in a one direction, not one step forward and two steps back. So I think let's hope for this.
Okay, let's talk about cross-border scaling. And now again, many of us do business in more than one country. And for me, the question is, how do you choose your battles? So if a founder came to you and said, look, I'm based in the US, I have a Singaporean holding company, I'm thinking of raising money in the Gulf and hiring people in Pakistan, right? Not an uncommon scenario. Kulsum's just left, but I think a bunch of her portfolio companies have that exact model that they're following. So what is the mental model that you would offer them to manage their exposure?
You see, a very interesting question and a complex one as well. I think the first and foremost important aspect when you're working with multiple markets, and it sometimes happens as well, you're raising capital elsewhere, you're investing somewhere, and you're resourcing for example. You need to understand the risk, underlying risk element, and you need to understand also in terms of how you're going to manage and hedge those risks. Okay? And I'm always a firm believer that, when you're running a business, you need to manage the risk. You need to have a portfolio where your risks are hedged because you're running a business. You're not playing with the financial markets and you're not a trader. Sometimes we lose that. Now, in this context, if you were working in multiple markets across border, you will be running several risks which are important, which could have effect on your bottom line. Your cross-border risk in terms of exchange rate between countries, because at the end of the day, where are you translating your balance sheet and income? Say you're in Singapore case, you're funding in dollars, you're investing in it. So all these things have to be taken into account, both in terms of your funding costs, in terms of exchange risk, in terms of your translation risk. And you need to also evaluate when you're getting into the market, whether you decide to hedge or not hedge. Is the product and instrument and the market available for the hedge or not? I think these are the questions that you need to sort of ask yourself.
So Azad, look, I'm not an economist and I can barely manage my own personal finances. I think for a lot of founders and entrepreneurs here, we don't have an economics background. We're not obviously sophisticated like the folks at the IMF. What's the plain English version of, you're a founder sitting in the room and you want to learn, what's the plain English version about how we should be thinking about managing currency risk in our business?
Okay, the funny part is, whether you're an economist or you're not, exchange rate and currency risk, even on the person on the street understand it. So the only thing that lacks is that he follows the correct psychology rather than looking at realistically what is he trying to manage in future. Simply put, currency risk is that you are transacting between two different markets, and that involves converting one currency to the other. The fluctuation of that currency could mean profit or could mean risk as well to your bottom line when you translate. Because if you're in X country and you're transacting with Y, you may have decided, the cost of product is this, the cost of service is this, and my return or selling price is this, so I'll get this profit. But by the time you translate that profit into where your income or balance sheet is, there could be other risks, because you could be earning in PKR where your balance sheet is dollar based. So your PKR may have profit, but your translation risk into dollars could end up in a loss.
So what's the best arbitrage opportunity right now that you see?
Well, let's not talk about arbitrage opportunities at the moment, because the world is a bit volatile, and some of those arbitrages should not be explored considering the current scenario. But from a business perspective, your rule of thumb should be that you should hedge a certain portion of your risk right at the onset. That's an insurance policy. If you look at multinationals, or even, they talk about consumer good products or US companies working in Pakistan, one of the rule of thumb is, if they open an LC, or they open thing, it's standard thing, 50% of the risk, exchange risk or whatever, they will hedge. That's a cost, known cost. And they may take a view on the remaining risk. Some do it 100%. That's a less headache when you're running a business, when you're trying to grow your business. So that's the thing sometimes that's for. And you've seen companies taking up fund on exchange rate or cost of capital, and then losing and having more headache and losing focus from the core business. Okay?
So this is a little off script, but I have to ask because there's a lot of different factors at play right now with tariffs, cross-border tariffs, and currency issues, and many things going on. It's easy as a business owner or founder to get distracted with a lot of things happening and not knowing what to really pay attention to. What's really going to make the biggest impact to my situation right now? So if you had if you were to narrow that lens for a founder to say, how important is this, how important is this, how important is these 4 or 5 different variables that everybody's dealing with, how would you, again, give them a mental model to think this through? Again, not assuming a high degree of sophistication, but certainly a high degree of interest in protecting their business.
Under the current scenario, and there are a lot of things which are hampering the trade channels, like tariffs or geopolitical situation. And all of these have their bearings on other aspects when you're running a business. In context of uncertainty from a macroeconomic perspective, volatility in the market, whether you're talking about interest rate, the cost of funds, you have to look at it in context. Like from a tariff perspective, it's all a lot we talk about, and I don't want to get into a detailed discussion. But tariffs are something which don't work long term. It's a short-term measure. But it has created the volatility which was uncommon, and it has spillover effect, and it's more pronounced in emerging market or frontier market, and the business world. So one has to look at it, you have to sort of ensure that your business is not concentrated in X market or whatever, and you have flexibility to manage your resource, whether it's the sourcing of labor or whether it's your so you have to look at from that. But you have to ride the uncertainty in the short term. If you take too many knee-jerk reactions, it's probably going to be possible. You have to be thoughtful in terms of like how you're doing it, but do gradually in terms of it. Okay. Sometimes the knee-jerk reaction is not the right way.
So I'm not going to take any names, but I've got a buddy here who is in the packaging industry, and he's been sourcing material from China for years. Great, supplier relationships and partners there. Now with all the chaos happening, he's bouncing around the back roads of Colombia looking for suppliers there, hoping he doesn't get kidnapped. So are you suggesting that, what should a person in that situation be doing? Stay the course, hoping that things will subside? Or is it actually important to, take a quick reaction sometimes and find an alternative pathway?
Look, certainly you have to, when things are happening, you have to reassess the model that you'll be working on. What I'm trying to say is, if you have concentrated resource on one market, you're actually bound to create a higher risk, whether it's a tariff or XYZ. So you have to look at it in context of the step, what you want to take short term, what you want to do medium term, and how you want to go to a long term. What I meant by not taking knee-jerk reaction is not switching right now and it's like going to Colombia or going to. You may look at it like in short term that okay, in the interim period, could I resource this thing from X market till the things stabilize or you have clarity, and then you can probably move it. So that's what is important. And obviously, there's an old saying, you don't put all eggs in one basket, but we sometimes do. And we sometimes concentrate in one market or one segment. So always have a backup plan in terms of your resources.
So
it's easier said than done, but that's how we should be doing it.
Right. Okay, so let's talk about when you walk away from a market. Let's say you're building in a market, huge upside, but it's getting riskier every quarter. So how do you know when it's time to double down or when it's time to pack up and leave? We all read headlines that talk about, whatever the country, again, take your choice of frontier markets, that there's a lot of opportunity, unprecedented opportunity in this location. How do you think seriously about, as a central banker and somebody who's been working at the IMF for a number of years, how do you think seriously about separating reality from hype when you're thinking about the opportunity in a frontier market?
Look, opportunities in frontier market or emerging market, there's always high risk, high return. Okay. So if you're there, you're going there in terms of taking certain level of risk, and then you return outpace the risk that you take. So my advice again would be the first point that I mentioned. Because the higher return is there because the risk is there. How are you going to manage the risk? Does that market provide enough tools or avenues? If you were to decide if the stress comes in, can you manage this? Whatever type of risk is, whether it's liquidity, exchange, if the market does not provide you an opportunity to manage it, or the tools or the market function is not there, then your return, maybe a 30% return will just erode in a second.
Asad, I promised that I wouldn't refer to you as an economic hitman. But, so I won't.
Okay, thank you.
But what do you think is the most misunderstood thing about the role of the IMF relative to what you might understand from the media and just general understanding of what the IMF does and doesn't do? How would you sort of reframe the role of the institution?
Okay. So, look, two things. One, there is always certain confusion in terms of the role of IMF and the role of World Bank. These are both sister organizations formed under the Bretton Woods Agreement. But there is a very distinct role. The IMF's role is from a monetary and financial system, the global financial system. And it provides three aspects, or three value addition to the members, 192 member countries. One, it is the only organization which has a global mandate in terms of monetary and financial surveillance, whether it's on bilateral basis, whether it's on multiple. Then it has a global agenda in terms of smooth functioning of a global financial system. That's one of the mandates. And the third is maybe a lender of last resort or the capacity building of the members. Sometimes, and the difference between the World Bank is it has a more economic development agenda. So it goes into project financing, developing, whatever. In some aspect, there is some overlap, but these are the two distinctions. Why IMF gets a bad name sometimes?
Okay, some people like it, man. I mean, it depends.
And I can tell you from that because I have negotiated from an authority side, sitting on the other side of the table, and I can. The thing is, most of the time you would see in a lender of last resort thing that IMF is going into a market when the market has already hit a crisis. So when the market has hit a crisis, whether it's economic or there's balance payment, to fix that, you need to take some harsh steps. You need to take steps to move to stabilization and then so that these things do not happen. So the misconception is that IMF has a standard, simple template, whether it's Pakistan, whether it's Sudan, or whether it's Colombia. There's one checklist, it goes on. It's not the case. It's not the case, it's custom. Yes, the 1997 crisis, more you could have said that, but it has come a long way. Most of the programs are peaceful. Now, the onus that is where the conflict comes in is also on the authorities. They are the one, they know their country more better than anyone like financial or macroeconomics in DC or XYZ. Where the gap comes in, the IMF team or multilateral may come with a prescription at this price. You need to argue and talk about how this can be. You agree on the end objective, but the execution bit of it, how and what timeline it has to be agreed, is not argued properly. And then you have expectation gaps. Oh, this was a structural benchmark was supposed to be done in 6 months, but realistically, to start off, it would never have been done in 6 months. So why did we agree on that? believe me, I can tell you from the other side of it. In my days when I was from the authorities or the team that we were working, whether from the Ministry of Finance or the Central Bank, we have gone and changed those timelines. And if you look at some of the programs, 2016 above, there are a few programs which were fully completed and all the structural benchmarks were met. So that's the point that we lack, and sometimes the media or the politics, plays a blame game. Oh, it matters. They want to strangle us. They want the poor to die. That's not. Even if you pick up the current Pakistan Review report, you will have very clear factors in terms of socioeconomic, protecting the poor, and what structural benchmark. So I stop here. I think that's the question which creates the misconception.
Thank you, Asad. Look, I think that this conversation doesn't give us easy answers, right? But I think what you've helped us today is think through these issues with a sharper lens, and I appreciate you making fairly technical and complex subject matter accessible for our audience here who are operators and founders. So for everyone in the room who's trying to build across borders, this isn't just theory, right? This is a reminder to stay alert, stay grounded, and know exactly what game you're playing. Thank you so much, Asad.
My pleasure.